All right, bonus number 10 in the $2 secret is your taxes, okay? Keeping taxes keeps the IRS away. You want to make sure you keep phenomenal records. Now, I want to be honest, I'm not always the perfect at this, but I do have all my numbers. One might be in my checkbook. I always keep the receipts, but a lot of them are just in email. So I can always pull them as needed, or I can send them to my accountant. And so using an accountant, they're going to be able to find ways in other materials and other expenditures that you have that you might be able to deduct on your business. And so what that means is that's going to lower your tax bracket and mean less taxes that you have to pay back in the long run, depending on how you do this. Especially if you're just working out of your own home, you might be able to have a home office space if it's a dedicated office. Now, if it has a closet with, all your clothes and everything and one little computer desk, it doesn't really work. But if it has a desk with all your books and all your materials and your computer and nothing else, no closet space, then yeah, you might be able to take that part of your home and reduce that amount for your taxes. My electricity utility bills, my phone bill, my computer, my websites, my email autoresponder, all of these are things I'm using. When I go out to dinner and we talk about business, the non-alcohol portion of the meal I can deduct. If I go on a business trip, okay, the mileage on my vehicle, if I have a plane flight there, okay, those are all tax deductible. When I go through and I buy something like this, an educational book, I can deduct the taxes. If I buy something educational from a thrift store, I put it in there because it's an educational experience, or maybe it's a donation. I mean, there's different ways you can look at it, but if it's an educational book, you could qualify that. Again, don't quote me word for word on it, but these are the types of materials that you could reduce your tax basis on. Now, the other day I mentioned with the idea of, not being a broke joke. When you do buy stuff and when you do invest stuff, always, always, always save your receipts. Maybe make an email folder, so anytime you have a receipt, you can just dump them in the folder. For example, I have a folder that's titled Receipts with the year on it. And I have the last 7 or 8 years just sitting there, so I can actually go back old years to figure out if there was something that I bought, or just to try to remember, or to check stuff. And also it's good, I think you have to have, they recommend up to 7 years of back records, just so you have that in case someone were to come and audit you. And so if you have the proper records and the proper information, usually the IRS isn't going to bother you. But if all of a sudden, you have all these random expenses, then things might be a little bit different. So, don't say, you have this $100,000 write-off, but, you're only making $5,000. It doesn't really match up with your business if you only had $5,000 worth of profits, and $100,000 worth of, negative values or, business expenditure. So they might think a little bit different of that. But again, the key thing every month, if you're in a platform, or if you're in a membership, if you're getting new education and continuing education, make sure you save those receipts and tally them up. So at the end of the year, you can apply that as a business expense, which again reduces your overall tax basis. So again, take care of your taxes month after month after month, and we'll see you on the next strategy and tip of our 13 lucky strategies. Take care.